Welcome back to another episode of Your Average Traders. Today we're going to focus on a bit of a short form content. We thought going forward, some of these trades that we're doing on our average traders portfolio, well, the one that I'm doing primarily with options, going to do a bit more of a slight deep dive into the trades that are done, to sort of give a bit of reasoning behind why we're doing it. And, regardless of whether it's right or wrong, it's just the thought process behind it. So it can give a um, bit of insight into to the thinking, and that will be in complementary to our long form content as well. So today, we've had a good day in market. Nasdaq rallied almost 300 points. The Nasdaq massively outperformed the Dow, which was only up about 0.3%, while the Nasdaq was up almost 2%. So there was a big divergence there. The Russell was also just fractionally higher. So definitely tech was the star performer today. We saw Tesla up another 5.5% now, within touching distance of reaching another all-time high, considering it was literally 700s about a couple of weeks ago, 3 weeks ago. So, it's been pretty meteoric rise in some of these tech names. But today, let's look at the trades we've done today. Today, I done one closing trade and one opening trade. The closing trade was in KWEB, which is the China Internet ETF. And here we can sort of see that we had this huge move down from the 90s all the way down to 20. And we had that big move up that we actually spoke about in our last pod, and we bounced from 22 all the way to 32. That was something like a 50% move on that day, and then we sort of consolidated a bit, and then on that slight pullback, I did a bull put spread, and on that particular spread, I actually did 25.5, 27.5 puts for $80 credit on a $2 wide spread for a max $120 debit. And I closed the trade out today for $29 debit, so took a $51 profit, did two lots, $102 on that particular trade on this 10K portfolio. And so yeah, so it was a good winner. It's nice when they just work out rather than having to hope it comes back, when the market's like trending one way or the other. But this one worked out, was in trade for about 12 days. And the reason why I got out of this one is that there's 25 days till expiry. This was the April 29th strike. And for the last $29 of credit, it was not worth waiting almost a month to get that, considering pretty much 60-70% of the credit has already been taken in on this one. So I was happy to take the profit there. As we can see, we have definitely formed a nice base, and I mean, we could continue going ahead. I think the next notable area is this 35 mark, which was the support over here, and it was where it was support before the move down lower. But if we can reclaim that previous support and break the resistance, I think we can stabilize there and maybe push towards 40. So I'm definitely on the lookout for KWEB. If we have another dip back below 30, I'll definitely be putting on another trade. So that one worked out. But another trade I did today was USO. So USO is the oil ETF. I did another Iron Condor, the 65.68 put, the 84.87 call for a credit of $130, $170 risk, with a strike with expiration of May the 20th. So looking at USO, we can see well, this is going back. This is actually a daily chart. This was back in 2020, and we've steadily just been going up and up and up and up. And then here was the big bar higher on the back of the Ukraine Russia war. We went from around 65 all the way to 80, and then we pushed almost to just below 90 before we did fade. And then we touched back towards that lower trend line, and now we're trading in the middle. So my thought process behind this is that I would be surprised. You can never say never, but I'll be surprised if oil went back towards $130 a barrel. And I can only see if something really escalated in terms of the Russia-Ukraine war, then we might push back towards it. But otherwise, I could see us just meandering. And while the tensions are still ongoing, I can see an underlying bid to oil. So my thought process that I could see support coming around if we went back towards the low just before the war started, and the high, if going back towards 130. I'd be surprised if it really pushed back again. Depends, things can change easily. We could always have like the nuclear or the chemical weapons that might come that might really push up oil. But in this case, this is the trade I'm doing. $130 potential profit against $170 risk. So it's about roughly about 75-80% potential profit to loss ratio. So I'll take that on this particular spread. If we go back on this chart all the way back to early 2020, going back to 2019 as well, you can sort of see that at that time we were actually trading above this 90 mark in the USO. But bear in mind that USO naturally does drag because taking in the roll cost of oil, because this is a continuous contract, but the front month futures roll every month, and most of the time when it's not in backwardation, it's in contango, so you will get a bit of negative drift. So obviously where we were here doesn't really necessarily reflect that we were on oil at 130. Here I can't remember what we were at, but maybe about 60, 70. But here we had a lot of that contango, the roll costs that come through with oil. So this is why we're not as high as we were back in the 2019s and early 2020s. So this is the trade I've put on today. KWEB I closed, and one on the radar is Robinhood. So Robinhood, last week it had that monster move where we moved up from about 13 to 16, 17. We moved up about 25, 30% on the day. And then we rejected this upper trend line and back towards 1350. We're trading around 1383 was the close today. But we can see here we're forming a saucer pattern, and we've had 3 wicks that has tagged this lower trend line. We had one back on end of January, another one end of February, and mid-March. So we've had 3 bars. They both found strong support at this rising trend line. So my thought, we're trading roughly at the middle of this range. So if we get any pullback towards the lower end of the 13 handle, I'll be looking to take a trade long on Robinhood, because I definitely seem to see a lot of support there. Robinhood has a big cash pile, which sort of underpins the valuation at this level around the 10s, 12s. So I think it's a good safe bet relatively to go long at the low 13s or high 12s. So we'll see if it gets there. Hopefully it does give me an opportunity to get long, but if it keeps on going higher, then I guess I'll just miss out on this trade. But that's what's on the radar. And that's a wrap for today's portfolio update. And so we'll be updating regularly on the moves that we're making in the portfolio, just to give an insight of what we're doing and why we're doing it, and so that you understand that it's not some just randomly put on trade. There's a slight bit of thought process that goes behind it. And and so we'll catch you on the next one.